Ever pondered over the difference between International Financial Reporting Standards, or IFRS, and International Accounting Standards, or IAS? It is a common query, and the answer lies within their development, structure, and authority. Let's delve into the International Accounting Standards, or IAS first. The International Accounting Standards Committee, or IASC, developed these between 1973 and 2001. The IAS are a set of standards issued by the IASC, and they were the primary international accounting standards before the establishment of the International Accounting Standards Board, or IASB. The IASC, a private sector body, issued the IAS, and interestingly, compliance with IAS was voluntary. Countries had the option to either adopt or adapt these standards for national use. Now, let's shift our attention to the International Financial Reporting Standards, or IFRS. Developed by the International Accounting Standards Board, which succeeded the IASC in 2001, IFRS is a more comprehensive set of standards that includes IAS. It encompasses the standards issued by the IASB, including updates and new standards introduced after the transition from the IASC to the IASB. Unlike IAS, IFRS are mandated by various countries and regulatory bodies globally. Many countries have adopted IFRS as the basis for preparing financial statements of public companies, making compliance with IFRS often mandatory for companies listed on stock exchanges in these jurisdictions. Now to the key differences. The development authority for IAS was the IASC, whereas for IFRS it is the IASB. While IAS primarily covered international accounting standards before 2001, IFRS includes all standards developed by the IASB, including updates and new standards introduced post-2001. And while compliance with IAS was voluntary, with countries having the flexibility to adopt or adapt these standards, many countries mandate the use of IFRS for the preparation of financial statements, especially for publicly listed companies. Indian accounting standards, IAS, are largely converged with International Financial Reporting Standards, IFRS, aligning India's financial reporting framework with global standards. The adoption of A&D as facilitates cross-border comparability and enhances transparency in financial reporting for Indian companies. In summary, IAS refers specifically to the standards issued by the IASC, while IFRS is a broader term that encompasses the entire set of standards developed by the IASB, including both original IAS and subsequent updates. IFRS is more widely adopted globally and is often mandatory in many jurisdictions. As of January 2022, 16 IFRS and 29 IAS are available. These numbers may change over time due to updates, revisions, or new standards being issued. For the most current and accurate information, it's recommended to refer to the latest publications from the International Accounting Standards Board. These standards cover a wide range of financial reporting topics, including revenue recognition, financial instruments, leases, and more. The IFRS standards are globally recognized and widely adopted, contributing to consistency and comparability in financial reporting. There are standards available for SMEs as well. While some IAS have been superseded by IFRS or withdrawn, they may still be relevant in certain circumstances. IAS standards address various accounting topics, such as presentation of financial statements, income taxes, and the disclosure of information in financial statements.